Today, Bitcoin and Ether take a dive. Iran reportedly used crypto to order imports for the first time. And Zipmex prepares to restart more crypto withdrawals. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Digital currencies are falling this morning. By noon Eastern, Bitcoin near $23,000, Ether traded at $1,600, and Solana fell to $40. On to the top stories. First up, Iran just used crypto to order imports for the first time. According to the Tasnim news agency, the country used about $10 million of an unspecified cryptocurrency to complete the transaction. And an Iranian official tweeted that smart contracts and crypto will be widely used by the end of September. The use of crypto could allow Iran to circumvent harsh economic sanctions imposed by the U.S. Next, Zipmex is restarting withdrawals of Bitcoin and Ether. The exchange will release a specific amount of Ether starting August 11th, and Bitcoin will follow a week later. Now, Zipmex restarted withdrawals of XRP, Solana, and Cardano tokens last week as well. Zipmex had halted these transactions last month due to market conditions and is still owed millions of dollars from Babel Finance and Celsius. Last up, GitHub just removed the code for Tornado Cash. Tornado's founder tweeted that his GitHub account had been suspended less than a day after the U.S. imposed sanctions on Tornado Cash for its involvement in billions worth of stolen crypto funds. The founder and several industry leaders also questioned whether writing source code is illegal. Several experts pointed to a 1996 federal court case, Bernstein versus DOJ, which protected code as speech. Okay, for our main story of the day, we are turning back to the markets. I spoke to Mauricio Di Bartolomeo of Ledin about today's dip in crypto prices and his outlook as we approach Ethereum's merge. So, Mauricio, first things first, give us your reaction to crypto markets as they are right now. You know, we are down a little bit today, but we've seen Bitcoin hover around the $22,000, $23,000 level in recent days. Is the worst behind us?
It appears that the forced liquidations that were very crypto specific arising from the Three Arrows collapse and some of the halted withdrawals that you saw, it appears that those forced liquidations have been now, flushed out, and that Bitcoin is now essentially behaving a bit more like any other asset that is impacted by macro tailwinds. And I think the two big trends that I'm seeing or we're seeing in the space is, of course, there's a lot of excitement building around the Ethereum merge. But there's also a very interesting dynamic happening between risk markets and potentially safe haven assets. And this is the interaction that we're seeing between Bitcoin and stablecoins. And so as Bitcoin has been selling off slightly, now that risk is off, we're seeing a lot of people basically rush to the safety of stablecoins, particularly in emerging markets where their local currencies are melting. And this is a part of the world where we've been pretty focused on for the last few years.
So if things really are stabilizing for Bitcoin and the crypto market kind of broadly, what do you expect looking forward in terms of price action? Do you see a rapid rise like we saw in 2021? Or are we in for, a little bit more of a slower build?
A lot of that is going to depend on what the Fed does in its coming meetings. I think we saw a big shift in the market when they basically pivoted from lowering rates to rising rates in November. And that's when the markets kind of turned a corner. Right now, I think markets are finding some footing. A lot of it is on the back of their potential pivot that they signaled in their last meeting, where they might be moving towards smaller increments of interest. And some people are interpreting this as a pivot. And I think we're not quite out of the woods yet. A lot of people are still waiting to see tomorrow's inflation reading and what happens in the September meeting. But I think a lot of the focus right now is on the Fed's December meeting. And I think people are starting to pin the odds of potentially lower increases on the interest rate for that meeting. And I think that's when we would be turning a corner and the markets could be rising faster.
So it all comes back to the Fed. That is certainly something we are hearing really across the board right now. And you did mention liquidity risks. And as a crypto lender, are you still concerned about some of the fallout we saw from Terra, Celsius, and others?
So as I mentioned, I think a lot of those forced liquidation risks are likely behind us. At Ledden, we don't expose any client assets to any DeFi protocol. So that's really something that it's a risk that we're not exposed to, but it's a market that we obviously continue to pay attention to. But again, I think in terms of forced liquidation activity, you may have some more liquidations coming from these bankruptcy proceedings, but they would be looking to get a great price. They're not going to be essentially market selling orders. They're going to be very methodic as to how they liquidate those assets to get the best value. And so I don't think it'll put the same type of pressure that those forced liquidations or cascading liquidations did back a few months ago.
And has this kind of laser focus on the crypto market in the wake of these bankruptcies, has that led you to change any part of your business?
Not at all. In fact, it has actually reaffirmed a lot of our theses. So as I mentioned, we only work with Bitcoin and USDC. We don't expose our clients' assets to any type of DeFi protocols. We were the first lender in the world to do a proof of reserves attestation with a public accountant. We do them every 6 months. And so we're actually seeing a shift into safety, and being responsible and transparent is now sexy again. And I think that you're seeing consumer preferences shift away from high yield, high risk back to certainty of having my assets back.
And finally, you did also mention the upcoming Ethereum merge, which of course everyone is watching closely. Does that hold any substantial upside for Ether in your opinion?
There's definitely an increase in activity around Ethereum futures markets, Ethereum options markets. Everybody is very excited to basically turn Ether into a native interest-bearing asset. People are pinning the potential yield at 8%, which is actually pretty close to the current inflation rate in the US. And so it'll be really interesting to see how this merge shifts the structure of Ether derivatives, the Ether futures curves. There's going to be some very interesting impact. But if it is successful, I think it's going to bring a lot of excitement to the space. And the BlackRock Coinbase partnership, I think, is another tailwind that could potentially move these assets higher in the coming months.
Okay, that's all for today, but we are back again tomorrow, and we'll see you then.